Okay, so we've learned how to set a stop loss. We've learned how to set an entry for both proximal and confirmation entry. And now we are going to go over the process of setting a target, which is probably the simplest of all of them. Okay, so basically what you want to do, if it's a proximal entry, you're basically going to take the difference between your proximal line and your stop loss. But if it's a confirmation entry, then you're going to have a 10-cent buffer for your entry, in which case you're going to take that price point and subtract your stop loss, the price point for your stop loss, okay? So in this case, you would take $216.29, and you would subtract $214.66, and I believe that would come out to $1.63, okay? So now that you have your risk per share, you are going to identify where you want to set your target, and all this is going to be somewhat dependent on your position size. If you buy multiple shares or multiple contracts, or you just want to sell them all at once, that works too. All right. So basically what you're going to do is if you've identified that you want to set a target of 3 to 1, you take your risk, you multiply it by 3. That gives you 489. You're then going to add 489 back to your entry price of 216.29, and that gives you $221.18, which is your target. Okay. If you want to set another target, you can do that. But that's the process. Very simple. Not a whole lot to do, not a whole lot to think about. The whole point is that when you've identified your stop, you've identified your entry, you also want to identify a target. And all those three are going to be primarily dependent on which trading platform that you decide you want to go with. I can tell you now that Robinhood does not offer bracket orders. And after speaking to several of their representatives, they have no intentions of ever offering bracket orders. Okay, just a little bit about Robinhood. They want you tied to the screen. What you want to do is find a trading platform that will automate submitting an order as much as possible. As much as you can automate, the better. Okay, so if you can submit an order with a stop loss, an entry, and a target all wrapped up in one, that's called a bracket order. You can find that on Thinkorswim. You won't find that on Robinhood. Now, that's actually a part of their business model. Okay, Robinhood is designed to be used from your cell phone, which is another issue. If you can access a trading platform from a cell phone, that's pretty convenient, more or less. But for the most part, you don't want to put your orders in through a cell phone. Use a laptop or use a desktop computer. Sit down, look at the chart, go over the chart, score the trade, map out the trade, then submit your order. The more you automate, the better. You don't want to be tied to the chart. If you are tied to the chart with a trading platform like Robinhood because they don't offer bracket orders, then basically what that means is you have to put in your entry separately, you have to put in your stop loss separately, and you have to put in your target or your order to sell separately. The more you have to do that, the more buttons you have to push, the more you're tied to the screen, the more you're looking at the screen, the more you're second guessing yourself, the more you're doubting yourself, the more emotions creep into your trading plan. You do not want emotions creeping into your trading plan. Your trading plan is calculated. So if you're making decisions that are not calculated, then you are basically going against your trading plan. Going against your trading plan is how you lose. If you go against your trading plan, you're gambling now. There is no more calculation. You've thrown it out the window. If you're making decisions based on hope, fear, or greed because of what you're seeing on the chart, making decisions out of ego, you're gambling. You're going against your trading plan. So you need to find a platform, a trading platform that will offer bracket orders. That's number one. And you need to find a trading platform that allows you to place trades on a virtual account so you can practice before you start using real money. If you're comfortable using real money, or you just say, hey, I don't want to do virtual, I want to use money, then start with $100. Some people actually recommend you start with real money because now you're building up the emotion, or there's going to be some emotion. Even though you've plotted the trade, you're going to feel something. So some people will recommend start with $100. That way you kind of get a sense of what you're going to feel, and you can start analyzing your own personal trading psychology. All right. So anyway, hope that helps, and I'll see you in the next video.